From the campus of Yale University, this is Business Talk with Jim Campbell, nationally syndicated across the country on the Biz Talk Radio Network and coming to you from our flagship stations, Yale Radio WYBC and 1490 AM WGCH Greenwich. All talk and all business, 60 minutes of radio with leading figures from the world of business along with the business of politics and sports. And our show motto, Biz Talk, is taking on Wall Street in Washington from the radical center, and today we're doing just that. From corporate crony capitalism to Main Street capitalism, taking on the status quo, income inequality, on Business Talk with Jim Campbell. David Smick is chairman and CEO of Johnson Smick International, an advisory firm in D.C., and the publisher and founding editor of the quarterly magazine International Economy. He was a staff member of the United States Senate. At age 26, he became chief of staff to Congressman Kemp. He's advised both Republican Ronald Reagan and Democrat Bill Bradley on economic policy during their respective presidential campaigns. The new book, The Great Equalizer, How Main Street Capitalism Can Create an Economy for Everyone. Welcome, David.
Oh, it's great to be here.
You are an idea machine.
Oh, thank you.
First off, I just want to ask you, because this to me is incredibly impressive. You're one of the few people that predicted the 2008 crash and the 2016 populist revolution. What leads you to be able to look around the corner like that?
I don't know. That's how I got into advising a bunch of hedge funds. My first client was George Soros, and maybe I just don't know enough to listen to what the conventional wisdom is saying. I just operate off of instinct. And I was at 9 years ago at a Washington dinner party, and I was spouting off. I said, look, the financial markets look great. Everything looks wonderful. We're in big trouble. The banks have no clue what's on their balance sheets, all this trust me paper. And everybody looked at me like, who is this guy? Get rid of him. But on the way home, my wife says, Vicky said, you should write a book on the subject. So I wrote The World is Curved, and then, as it was coming out, the crisis hit. And so it was, I think it sold out in China in 2.5 weeks. And Bill Clinton said, this is the best, or one of the three best books. And when the president endorses your book, it just soars. So I just said, I promised my family no more books unless there was something I absolutely had to say. So it's been a long time, but I really felt there was something about, I'm from a blue-collar background in Baltimore, and I just had a sense that there was this anger there and disillusionment among average working families, even though, the stock market was doing great in recent years and looked like the economy was kind of limping back and everybody was happy. Nobody among the elite power centers in Washington or New York or Boston or the West Coast, was complaining about anything. So I sensed that I came across this figure that half the country is nearly insolvent. I mean, half can't afford a $500 bill for an unexpected medical emergency or car repair. And I said, well, this is an amazing world we're in, where we have, and these people are forgotten. And so that's when I really began to explore writing a book on this kind of anger and why it was there.
And I guess maybe George Soros didn't speak to you recently because apparently he lost $1 billion shorting the election results on Trump.
No. There's in his organization, there's a political side with a huge wall to the trading side. But it's really quite. I wasn't surprised when Bernie Sanders did as well as he did, and I wasn't surprised that Trump did as well. It just
interesting.
You could see it coming.
We look at Russia as kind of a criminal oligarchy, and scaringly, we look like we become kind of crony capitalism. Tell us how you define corporate capitalism, and then what is Main Street capitalism?
Well, I began to look and say, why? What is really the what's making people angry? And it's not just the lack. I mean, economic growth is important, and certainly, we've made excuses for an economy growing at half its historic rate. But frankly, I went back, and if you were if you look at since this country was founded in 1789, the country's grown by an average growth rate of 3.7%. Mm-hmm. Now we're growing at half that. But I went back, and if the country instead, since 1789, had grown by an average annual rate of today's growth rates, we'd have the per capita income, not of the most powerful economy in the world. We'd have the per capita income of Papua New Guinea, a small island.
Pretty amazing.
And so growth is everything, but there's an extra element here which is pertinent to your question. I began looking at social mobility, which is, I think, the real thing the real reason people are angry and upset, because it affects their kids and their grandkids. 30 years ago, people in the bottom 25% of all income-earning families had about a 25% chance of rising to the top 25%. That was kind of the American dream, and that was my story. But today, they have about a 5% chance, so people feel trapped. And worse, they feel like their kids are trapped and their grandchildren. They're not going to be able to rise up. So I said, why are they feeling trapped? And they're feeling trapped because, in large part, one of the main reasons is that the number of business startups in this country has really taken a nosedive. I mean, we're starting businesses at half the rate of just 15 years ago, and people are holding back. And millennials now, I mean, it used to be millennials would start businesses. They're way down. And I started looking why. And people, it's one reason that fiscal policy and monetary policies, and since the financial crisis, haven't been affected. You're not going to start a business if you can't get capital, even if the interest rate is near 0%. So I began looking at this. What are the reasons that people are holding back? And I think one of the prime reasons is that the system has changed. Washington, in particular, has been taken over by the corporate capitalists, the people of inside privilege, the people who manipulate the system to their advantage, particularly regulatory and the antitrust and even the patent system. And they do it in a way in which Goliath always wins. So I began looking and saying, well, this is a sharp contrast to what we used to have, which is what I call Main Street capitalism, which is a capitalism of a fair playing field. If you look at even the big centers of high-tech innovation, Google and Facebook, you say, this is amazing companies. They spend more money today on lawyers and lobbyists to stifle competition and keep competitors from rising up than they do on new research and development into developing new products. And it's quite amazing. And that's corporate capitalism, and that affects the opportunity. That affects the social mobility. And just one last quick thought here. I went back and I looked and said, America, the United States since 1976, has had an amazing run, really from 76 to the financial crisis, an amazing run of business startups that went big. These people who started up firms like Apple and Intel and even just a whole series of firms, a lot of them high tech, that began these little small startups, and now they're big successes, and they've spun off a lot of what they call it the flywheel effect, a lot of other supplier firms and other firms that came along, and it was, it's pretty impressive. And I looked at Europe during the same period, and Europe, instead of dozens of startups from the entrepreneurial sector, these examples of innovation, of creative destruction, instead of dozens, Europe had one company. It was an energy company in Norway, and so I think under corporate capitalism, I mean, Europe has been captured by corporate capitalism since the 80s, and look at the result. But I said America's moving in that direction, and I want to write a book that says we don't have to go that way.
All right, we're down to the last minute. This middle class stagnation, that statistic about moving up, declining so significantly, I think very profound. Look around the corner now, what you do in the last few seconds. Is Donald Trump the fit to be able to try and get at some of this stuff?
My worry about Trump is that he's a top-down guy. He's a developer of skyscrapers. And what do? You put together a plan with architects and designers, and you control it from the top down. And we live in a bottom-up world, and a bottom-up world of evolution, of ideas that it's a process you can't control. All you can do is create the conditions for this kind of bottom-up. And whether it's whether it's with Facebook or ISIS, we're seeing a bottom-up revolution. And my concern is that he's not prepared for that. And the other thing, real quickly, is that if you look at the speeches that Trump makes, he makes good points about the Chinese and currency manipulation and bad trade deals. But exports are only 13% of our economy. What about the other 87%?
You've got great insights, I tell you. Business Talk with Jim Campbell over the Biz Talk Radio Network. Over 350 stations around the country. Go to biztalkradio.com to find that station closest to you. We'll be right back to talk about a grand bargain of economic reforms. And we're talking with an advisor to top global investors and an economic reformer, David Smick. And you talk about this 14-point plan, a grand bargain as you see it. But let's start off. Obama made a big effort on a sort of a big entitlement reform, with Congress and went nowhere. Talk about what has to be done with Congress and why you think that could work.
Well, I look at this. People say, "Why did you write this book?" The Great Equalizer. I said, "Well, I wrote it for millennials because not only are millennials going to be the most effective if we do not return to normal growth rates, but the entitlement situation is this is their future. And in fact, when I go around and give speeches to promote the book, I'm really surprised how when I mention to people, I said, you should consider buying this book if you have a millennial and giving to it. It's amazing. People rush up and they, please give me, sign 3 copies for my kids. Because everyone has that frustration, that their kids can sense the American dream is fading. But when you look at, there's just no denying that the entitlement thing is so problematic, and yet we just came through an election in which there was no mention of the issue. In fact, I was asked by a newspaper to write, an op-ed column recently, and they said, what would you suggest that if you were going to say that, Donald Trump was given a truth serum in which he had to say exactly what, you wanted him to say and what he should say, I said the first thing he should say is, I apologize to the country and I apologize for Hillary Clinton for both of us having gone to a major national election in which we never once mentioned debt or entitlement funding shortfalls.
Not only that, he said he wouldn't change Social Security and Medicare.
It's absurd. There isn't any, it's like a conspiracy of silence.
Yeah.
And they say, well, someone will figure something out. And but I argue that, one reason, there are a lot of reasons that people in the startup sector are holding back. And you can say consumers, everyone's holding back. And it really goes down, I talk in the book about, how much attitude matters, how much, we think the economies run off of spreadsheets and their econometric models and all that. You can't model an economy easily because it really comes down to attitude. And if people feel that fundamental problems aren't being addressed, they kind of know that. And I think they know that the entitlement issue hasn't been addressed. They know, you can see it in the polls. They know that these programs are going to be, there's no way that you can be giving out today $1 worth of services in Medicare giving out $3 worth of services in Medicare, but people are paying $1. It's not sustainable. And there's certainly the Social Security system, which, frankly, you could easily fix.
Yeah.
But they won't do it. And it's really, my argument is that, one reason is that no one suggested a grand bargain. No one said, look, people aren't going to, go to their constituents. People in Congress aren't going to go to their constituents and say, oh, by the way, I'm going to inflict some pain on you here. They don't do that. But if you came through them and said, look, we have a grand bargain that's going to involve not just entitlements, but a whole series of issues that's going to restore confidence. And that's really one of the things that I think is so essential right now for Trump.
I think that, and I want to move on,
Yep.
the ideas you have of combining stuff like entitlement reform for infrastructure investment or ending medical welfare, such as we don't negotiate drug prices, to tort reform, to a two-year moratorium. But let's move on.
Yep.
Corporate profit repatriation has been a big thing, and there you have an idea, too, of giving a sort of a tax holiday in return for infrastructure bonds.
Yeah, I think that, we're sitting around saying we're going to give corporations. I think we have to have lower corporate tax rates. It's kind of insane to have these companies offshore. But I say, well, look, if you're going to make it very attractive to bring back U.S. companies and to bring back companies into America to create jobs here and whatever, well, I think you've got to have you make it attractive for them. But I think they also ought to offer up something. And I say, look, have infrastructure, a 1% infrastructure bond, so that you can say, hey, we are paying for this build-up in infrastructure that everyone says is necessary. And I think you'd have a lot of Democrats and Republicans saying, okay, we can vote for a grand bargain package if we can explain to our constituents why we're giving these corporate tax breaks, because we're doing that, but we're asking them to take on the financing in part for this, as opposed to just going into a situation where we have no financial solution to additional spending. So, but there are other ways. I think that the Congress is working on a border adjustment tax,
mm-hmm.
and I think that will spin off. If they do that, that will spin off about $1.4 trillion over the next 10 years, which would, I suspect that Trump, in the end, Trump is telling the congressional leadership, I don't like the border adjustment tax. I just want a bunch of tariffs, because they're more politically powerful and threatening and they're high drama. But a border adjustment tax, unlike a tariff, would be WTO compliant, and it would be perceived as just a VAT, a different form of a VAT, and so you might be able to get
And tariff has not worked historically.
Tariff,
go back to the Depression. So
tariff, you get into a trade war. They fight back.
Yeah.
Whereas this, you say, no, we're just going to move to a system like the rest of the world has, in which our companies are, we're not penalized. But I do think that if Trump is, we're going to find out if he is the deal maker that he says he is, because there are a lot of ingredients here to do a deal. And once you do the big deals and you bring this together, and people sense, oh, maybe these clowns in Washington are actually getting something done. Maybe the country's on a new footing. I got to tell you, I think the markets will move very, very quickly.
Averting a debt crisis, you talk about global debt at $180 trillion, which is pretty scary. I never know what this tipping point is in the U.S. when we get over 100% or whatever. What do you think about there? And also currency manipulation. You talk about a Plaza 2 potentially.
Yeah, when I look at people look at the world today, and 180 trillion. You're talking about debt on quick. It's on the road to reaching 300% of GDP.
Yeah.
Global debt. That's public and private. It's just astounding. So you say, what? There are experts who say, oh, that means hyperinflation. Others say we're setting ourselves up for a financial crisis. China alone is just their debt has grown so fast, unprecedented for debt to grow at that speed.
You're listening to Business Talk with Jim Campbell. We've got more on David Smick's call for a grand bargain and small business growth. That'll be coming your way next. And we're back with David Smick. He's got a new book, The Great Equalizer, How Main Street Capitalism Can Create an Economy for Everyone. He's got more interesting quotes. In 25 years, we're going to have 3 billion more people coming into the middle class globally. We'll need 750 million jobs. Maybe 50% of the workforce will be replaced by machines. So talk about what needs to happen to encourage new enterprises. And venture capital you always think of as very risky, very few startups making it. What exactly do you mean by a sort of a mass startup economy?
Well, if you, I went back and looked at some of the work of Ned Phelps, who won the Nobel Prize, and he looked at per capita income. When did per capita income take off, and when was it stagnant? And when you go back and you look at the history of economics, you would think per capita income during the Enlightenment would have taken off, would have been a big deal.
Mm-hmm.
It wasn't. People were miserable. Now, the elites did better. It was a period of rebirth of knowledge and whatever, but the elites did fine. But then the per capita income in the world really took off in 4 countries, beginning in 1820 and really lasting up until, some would say, World War I, others would say to the 1960s, but it was when in Germany, France, the United Kingdom, and the United States, there was a change in attitude in which you had this, what Phelps called mass flourishing, in which everyone, the population at all levels kind of became idea machines, and they engaged in kind of a lot of startups, but also just a commercialization mentality. They kind of pulled away from the state and the church, and there was just a sense of, Lincoln was president during this time, and Lincoln noticed, in the midst of the Civil War, he said, the American people have this intense curiosity for the new, and that's kind of what Phelps identified this, and he called it a mass flourishing, in which people, ordinary people, took, innovations and gave them commercial applications. It was just a mentality that said, I'm going to start something myself, or I'm going to capitalize on something myself. And it had, and that's when you look and see per capita income soared. And so I talked to him. I said, yeah, but wasn't this like infrastructure spending? The setting up of canals or
the classic stuff.
Yeah. He said, no. Even if you account for all those changes, he said it was an extraordinary period. There was an attitude change. And that's what I think is so important in the United States for us to get the kind of, we need an attitude change, but it's not just in Silicon Valley. What I'm calling for is an explosion of innovation across not just Silicon Valley, but in every community, because we've had amazing technological progress. The information economy is going to be radically transformative, but we have to concentrate on innovation that reaches all sectors of society. People need to feel they can be a part of this, and everything doesn't have to also be in the high tech world. People are starting companies that apply existing technologies in more creative ways, and it's a mentality. I call it Main Street capitalism or innovative capitalism or empowerment capital, but it's a mindset that says I can do this.
And we had Steve Case on, the former head of AOL. He called it the rise of the rest, which is to spread this around the country as well. When you talk about encouraging new enterprises, you stop Fed financial repression. What do you mean exactly? Well,
I think if you look at since the financial crisis, and it really, the Fed's well-meaning but disastrous behavior since the financial crisis is kind of an indication of corporate capitalism versus what I call Main Street capitalism or innovative capitalism. The Fed dropped interest rates to zero or near zero, injected into bank reserves huge amounts of liquidity. And you know what? Thank God they did. That's what the job of the Federal Reserve is. It's to in times of crisis to try to stabilize things. But after that, it just said, look, we're going to take the emergency medicine and we're going to just keep taking it. And I think what you ended up with is, first of all, a system where there was massive transfer of wealth from Main Street to Wall Street, because you had a lot of people, holding
paper,
money market funds,
yeah.
Couldn't make things. But the bigger thing here is that you saw a consolidation of bank financing. Suddenly the biggest 12 banks became zombie banks, massively regulated, risk-averse. Before the crisis, they held about 45% of bank assets. After the crisis, 75% to 80%. And more importantly, regional and the community banks squashed. You could not get financing if you had that's the tragedy of the last 8 years. If you were a brain dead bank, you were still a systemic risk to the global financial system. So you got a cost of financing so much lower because the markets knew that you were going to you had the government behind you. But if you were a guy with a brilliant idea that and everybody said, boy, you can employ thousands of people eventually with this idea if you could get the finance. Couldn't get the financing because the normal avenues of risk capital just dried up. And I think that is, I'd look and say if when you look at the charter of the Fed, you look and say what is the legislative directive from Congress? It's to target jobs and price stability.
Yeah.
That's the dual mandate. But I think there should be a third mandate. It also should be to make sure that the financial system does not become completely slanted and biased in favor of the big, the established, the corporate, and the status quo at the expense of the small and the entrepreneurial and the innovative. And that's, the Fed doesn't think that way, but they ought to think that way. They ought to think about the unintended consequences of anything they do. It's not just to prevent, and thank God they prevent systemic risks. Nobody wants to, there are conservatives who say, "Oh, let the market clear," and I say, "Well, we could clear all the way to a depression," but the Fed has got to have also a much more nuanced approach that says we cannot have unintended consequences that squash the innovative side of our economy because in the end, in the long term, we're going to pay for that.
It's interesting. I had the zombie bank thing really hit me, and you talk about Jamie Dimon being treated as like a rock star. I went to school with him; he was in my class, but it's true. These guys run like utilities now. Let's focus on workers for a sec now. Do you think, and first off, education reform would seem to me to be key because that's where a lot of hopelessness is. Folks are in failed schools and inner cities. The teachers' union doesn't support that. The community colleges need to be upgraded. What do we need to do there? And what about, do we need to raise the minimum wage, or is that a net negative?
Well, I don't think you need to raise the minimum wage to $15. I think you would automatically, put a lot of people out of business. I mean, I look at something like McDonald's. 60% of the people who own McDonald's franchises flipped burgers as in their youth. It's a wonderful kind of chain of social mobility, and believe me, if you put the minimum wage at $15, all those jobs would be done by a machine very quickly. So you would break up that wonderful chain of social mobility. On the other hand, you have the people who aren't going to own a McDonald's franchise; they're just hanging on there. I have no problem with a small increase in the minimum wage. I think it's a great bargaining chip if you can also do some other things in the economy that particularly on the Democratic side, they might not want to do. But you can't make policy without both sides getting something and both sides giving something up, and that's kind of that's my thought on the minimum wage. But I think that we live in an information economy. Increasingly, information is going to be the most valuable commodity. Everything is changing. Cars today are 20% software. They're going to be in 10 years. They're going to be 80% software. Mm-hmm. In order to survive in an information economy of such radical change, it's a lifetime of education, and we have to set up online as well as our community college system in a way that has our people constantly being educated. People need to know that they have to, in order to survive, in order to thrive, they have to constantly be going through this creative process of re-educating, of exploring new avenues, because that's the nature of the economy. One of the people ask me all the time, well, I think my kids will be okay because they majored in computer programming, and or my other child is a math major and is analytically very astute. And I say that's Human intelligence is within a decade is going to be smarter than artificial intelligence will be smarter than 90% of American population.
And as we leave this segment, 3 great quick ideas: enhancing worker mobility through vouchers, investing in youth at birth with making them stockholders, which will compound, giving grads from foreign countries green cards to keep the brain power here. All very interesting. We'll be back. Our final segment, the transformation to Main Street capitalism. And we're back with David Smick, the man who predicted the 2008 crash, the 2016 populist revolution. You've alluded this to a couple of times. I want to get you to talk about it. You talk about we need to get confidence. Has the country lost its sense of purpose and the feeling the game is rigged? Where's that confidence going to come from?
Well, it's funny. I think when I look back at Ronald Reagan's administration, because I was involved in the beginning advising Reagan. I was in short pants, but I happened to be in a situation. Reagan did something very unusual. The air traffic controllers, went on an illegal strike, and he fired them against the advice of all his own advisors. Alan Greenspan and I have been friends for years, and he always made the point, he thought the most important thing Reagan did was when he fired them, it created a paradigm shift. He said then he was a private consultant, he said all of his CEO clients all over the country were really fixated on that because up until that point, the Japanese and German corporations were considered the new model. American corporations were considered dinosaurs. And so it created a paradigm shift, like suddenly, maybe they're political, because they fired the air traffic controllers and there was no, national strike by labor. It was kind of accepted, okay. And there was kind of a sense, things are going to be different. And I think the important thing now is can the Trump administration and Congress create the kind of quick change that people say, their problems are being addressed. And we now have a new policy, not just for trade and for currency manipulation, but also new policy for the innovation side of the economy. And if he can do that, people will quickly sense, things are changing. And so suddenly you get the paradigm shift, and the key is people feel better about the future. Even though polls show that the American people are, 70% don't, think the future is going to be bad, they're optimists by nature, and they are not necessarily, they want to be led. They want to be told that if that their leadership is making these changes, and at that point they're quite willing to be. In my gut feeling, they're willing to be optimism. And people say, "Why are you optimistic?" In this book, and I say, because I believe the American people are not going to give up on the American dream without a fight. And I also say, where else in the country, where else in the world, do you have a history of average people quitting their jobs, striking out on their own, starting a company, borrowing from family and friends, taking all this risk based on to start a company based on a new idea, knowing that 90% of these kind of ventures fail, but they do it anyway because they believe in the dream. And I do think that that this sense of people encouraging people to dream and to dare, to dream big and to dare big is really essential. I mean, if Donald Trump were to ask me what should be my goal over the next 4 years, I would say that, to encourage people to dream big and to dare big, because people have to believe in the future. And people are not just consumers. They're also the productive side of the economy. And so, we're not just saying, let's give the corporations some tax breaks. We should do that, but in the context of a grand bargain in which people feel the whole system is going to improve. But I do think that there's this undercurrent. We need kind of a bottom-up sense of confidence that you can be part of this kind of risk-taking, productive environment, or you can at least feel that others are going to be striking out, and when they do, it's going to create opportunity for you and your kids. Even if you aren't the entrepreneur, you're going to benefit from this kind of rising tide of enthusiasm.
Well, it's very well said, and maybe in the sense of purpose, you kind of mentioned national service might be a great idea to bring folks together. But let's talk some real-world threats as well. China, Their debt has, you talked about, they steal our intellectual property, a lot of rumors of currency manipulation. What about the threat of China? And, as you said, if we don't deal with global debt, what do you see?
Well, everybody, there are, the conventional view is, the world's accumulated so much debt, we're going to have a crisis, a hard landing, the economists call it. I'm suspicious. I'm wondering if the real danger is that large parts of the world become more like Japan. Mm-hmm. Japan, massively in debt, slow growth rates.
For 30 years, right?
Yeah, we're in the third decade of Japanese millennials sitting at home in their parents' houses. They do have nice cars, but they have no house. They have no future, and with a huge demographic tied against them. And I kind of look at China and I say, China's debt is exploding, public and private. Europe is in a similar thing. Europe is a special case because it's, they're trying to make this a monetary union, which is really unworkable given the differences, say, between Italy and Germany. But they're trying to make that work. But they are now going to take the lid off of any constraints, and their debt is going to go up too. And to a certain extent, when you look at Europe, you say, there's another potential Japan. And that's the question I ask in this book. How can America be different? Do we have to fall into the quicksand that these other economies are at risk of falling into, the Japanese quicksand, where we have just a general malaise? No, it's not a depression. It's mediocre growth and a sense of, it's not like the country, any of these countries will have a brain tumor. It's just like they get up every day and they have a migraine headache and the need for a root canal procedure. And it's miserable and you just limp along. And that's been the Japan experience. And the danger is that's going to happen to the world. My sense is it doesn't have to happen to the United States. We have advantages the rest of the world doesn't have. We could be energy independent in a very quick period of time if we wanted to be.
Interesting, very interesting stuff. We've come down to a rapid hour. You're a look around the corner guy. You've been alluding to your optimism. Sum up how you see the future that you'd like to see.
Well, the future I'd like to see would be partisan nonsense. I mean, Washington's all going to be partisan, but it's now reached a point of absurdity. I mean, people don't show up for the State of the Union, and come on. To tell you the truth, I have some confidence in Senate Democratic leader Chuck Schumer. A lot of Republicans don't like him, but I think that Schumer is so much of a cut above his predecessor Harry Reid. Who, and I'm hopeful that Schumer says, I don't want to go down in history as the guy who was just not, Harry Reid Jr. I want to, and I do know Schumer some, and I think he does have the capacity. He'll be a tough deal maker against Trump, but I'm somewhat optimistic that you have two guys who are not, that neither of them are of the Harry Reid mentality that says any deal is a bad deal.
Both New Yorkers.
That's right.
Thanks to David Smick, a subject right in our sweet spot, and let's hope that we can sort of break the backs of crony capitalism. The book, The Great Equalizer, How Main Street Capitalism Can Create an Economy for Everybody. You've been listening to Business Talk with Jim Campbell. Thanks to David Smick. Thanks to our national audience for listening, and we'll see everybody next Sunday on Business Talk with Jim Campbell.